Yep.
Okay, good.
I don't know why it's not going to my headpiece, but okay, whatever. Good morning and welcome to the SPX Daily Plan. And looks like we're up a few points from the close. We closed at 75, another day, another new all-time high. And we're testing the overnight high. Not that we put a lot of stock in the overnight high, but it's better than a kick in the teeth, and it's a reference point of some sort. And so here we are, what I'm calling the inflection point, not necessarily for this reason, and we'll get to that in a minute, because of kind of the structural dynamics of what's going on here. And you see this cute little icon? This little icon here? That's the icy whale, or some people who have discovered him after me call him Captain Condor. But by any other name, a rose still stinks, and by any other name, he still is a large player. And quick background, he sells 5 wide credit spreads for roughly a third the width of the spread, roughly a 20-ish delta at the expected move. After 2 days where we exceed the expected move based on however he calculates. I think he uses end of day expected move or straddle price as his metric, but I don't know. That's kind of what it looks like for me tracking him for. I've been Captain Ahab, not really. I've been tracking this guy for years. Anyway, so he employs a martingale simulation strategy. So what that means is he places a trade whenever his system says place it, and if he loses, he uses a progression. It's not exactly double up, and I have the progression written down. Like I said, I've been tracking them. Um, but it's roughly, let's just call it doubling to keep it simple. He doubles his size until he wins or goes broke. He hasn't gone broke yet. He's come close a few times. I don't know about going broke. I think if he loses on the final one, it would kind of be disastrous. But that hasn't happened yet. It's based on his back testing. He's confident, and he has lots of videos showing him, partying like a crazy rich Asian. Not just a movie title, not a whatever. And anyway, and so that's what we got. And so he's here with I don't know 18,000, 20,000 contracts up at 68.95 is the call that he sold, and 68.40 are the puts that he sold. That's a lot of positive delta stall area. Now let's remember that these are 5 and 10 wide. So the net delta is not as much as it looks like. So these can get overrun, but they tend not to. And actually, when we'll look at it in a second, there's 5 wide and 10 wide, which kind of makes violating a little easier. It just kind of loosens things up a little bit. And so, given the fact that we've got this big structure here, which is basically at the expected move, given that we've had a couple days of running, given that we have the FOMC and big tech earnings on deck and Trump Xi meeting and all that, it seems reasonable to conclude, big asterisk next to reasonable, that we have another inside day, chop day, and that we just kind of hang around, within the expected move. So the expected move, when I looked at it before, put us at right around 90.95 on top and right around 55-ish on the bottom. And that's where I would expect us to stay. Good morning. I see and I see. I spy with my little eye and I see. Exactly. That should be a new game, I spy with my little eye. What structures do you see? I see a debit spread. I see an iron condor. Anyway, hi. Um, You haven't been here for a bit. Glad you're back. Um, and this is Gamma Edge, Paul Duncan and Company. I'm not sure if it's Paul Duncan or Company. And great guys, great product, great service. When I first got involved with them, I said, "Wow, you got a lot of stuff." And he goes, "Yeah, I know. It's like drinking from a fire hose or something like that." But he's got a lot of great stuff, and they got a lot of great teaching tools and stuff. They put a lot of time into getting it right, and so I applaud their dedication to excellence. Okay, that said, let's get back to how we're going to make money. Okay, so here's where we are, and I got to really switch to show you to show you what we're looking at, and I'll actually pull up the Gamma Edge version so that if they want to put in like a little blurb of like a little part of their plan. They use Drunken Sailor Zone. I actually kind of started doing my daily plan kind of off of what they did and then modified it to make it fit my personality. And so I use Drop Zone, and it doesn't always correspond because they look at different things. But anyway, so here's where we are. So we close here at 75, and we've been kind of trading in this 70 to 85 point range in this narrow range here. And what you're seeing here is market maker position. So where market makers are long, customers are short, and vice versa. And so what catches my eye right here is over 75, we have basically thin, basically nothing, basically a ladder of nothing till 90. And so easy path up to stall around 90-ish, then 95, we have this structure. And so we have this kind of path up stall. That's why I called it on my chart, whatever, gateway. You know, maybe the gate, should call it gate slam shut here. But either way, that's one gateway up here, stall around here, reaction zone. On the other hand, go down below 70. There's really not a lot to stop us. You got this little notch here at 65. I'll show you the bar chart in a minute. It's easier to visualize. I just happened to be here when I was finishing up writing my plan. And then we just have thinness, a little bit of positive gamma in this whole cluster between 55 and 45. That's going to help buffer moves down. And of course, as you approach these zones, it's not like one number is what is hedged and everything else is forgotten. It's the aggregate gamma exposure, etc. That's hedged. And so those are the zones. Hope I'm not being too technical. I'm trying to kind of keep it simple. Okay, so now let's go to this. So in real life, this is what we're looking at. We got this big structure over here that's stopping the way up. As price moves up, they sell. As price moves down, they buy to balance out. Same story at the bottom. As price moves down, they buy. Think support resistance. Lines on your chart above and below. You've been looking at that for years, decades, who knows? These are lines on your chart that indicate big reaction zones. And in between, there's just not a lot. We have that little notch at 65. We have this little path up here. There's just not a lot. So don't torture the data. It is what it is. And yeah, we have some clues as to what might happen, but big picture, this is the big picture. And so now if we should have, one of my buddies is, seeing the risk toward the bottom. He's thinking that if anything, this is going to break, not the top. I don't know. I have it more if then conditional. If we get down here toward 40 and we break, you have this attraction. Now, what happens when these break? Because his levels are broken many times. Otherwise, he wouldn't have to keep doubling. If we break here, what happens historically, just for me watching this for years, is what happens historically is we kind of might stall out here and break, maybe stick a little bit, and then we tend to get an accelerated move away from this, kind of a stalling thing, and then these start to decay, whatever, and we kind of get a V back up, sometimes going back above, saving his skin, and sometimes not. And so if we broke here or here, I would look for signs of that V reversal, and time of day matters. So let me get to that. I put that in my note, but that's critical. And we had a great example of that yesterday. So yesterday, I'm just going to say we had similar, not really, structure with a big positive gamma, big S bar up above us. And as the day progressed, and as we stayed near that big bar, we kind of get attracted to it and then repelled as we get close, but attracted to it again. And time of day, the closer it is to the end of the day, and if it's still there, that process repeats until you end up sticking pretty close to it, all things being equal. All things being equal. There's been a lot of lately, last few months, last few weeks, maybe even the last few years, but accelerating more larger players coming in at the end of the day and playing these moves. So it's not unusual to see thousands lot calls or put buys near the money in the last hour or a half hour. And those kind of shape the way the distribution shows up. Also, let me mention, because this is important too, we also tend to get people that come in, a few systematic people that we recognize. We have nicknames for them: the 100 wide gang, the 5 wide gang, the IC gang. There's a few different systematic people that come in to help set the edges. And so what we're seeing here won't be there by 10 o'clock. Most of it will. This will certainly be here. Most of this other stuff will be here, but not everything is going to be here, or more stuff is going to come in. And what happens locally, when I say local, I mean near where we're trading, say within 20 points, 25 points, 10 points. What happens locally is there's a lot of buyers, sellers, intraday scalping that kind of reshapes the distribution and the relationship of one thing to another, mostly in smaller time frames. And yes, a shameless plug, in my Discord server, we get that. And we have the wise owl who kind of aggregates it for us and puts up updates, and we kind of keep updating it and letting people in the server know what's going on and kind of modify our expectations. And that helps us with scalping. That helps us with iron condos. It helps to know what the landscape is. You know, quick story as an aside. So in my youth, in my travels, there was a time where I was kind of went on like a little expedition camping out in the Sinai Peninsula, which was part of Israel at the time, in the Sinai Peninsula, in the desert by the beach. There's a backstory of that, but we'll leave that out. And I went to a kiosk a couple kilometers away to get something to eat. And then walking back, there was a sandstorm. And I had, my visual reference was the big mound here and the bush over there, not the bush, the cactus or whatever, whatever the shrubbery was over there. But the sandstorm changed the landscape. And I was kind of lost in the desert, in the sandstorm, literally. However, there were a few big landmarks that the sandstorm didn't erode, and I found my way back. And so these are the big landmarks that the sandstorm is not going to erode. Okay, thank you for humoring me with that story. But then that's kind of a good way to look at it. I think so. And so that's kind of what we got here. There's really not a lot else to say about this. Let me throw in a few other observations, and this is more broadly. So let's take a look at, where should we look? Let's look at the market maker exposure map. Okay, so what do we see here? Let's take a look at this. All right. In case you don't notice, this is 7,000. Big red means customers long. Big red means customers long. I'll get back around to that in a minute, Selena. I'll come full circle back to that. Now, this isn't necessarily today. This is the whole structure to infinity and beyond, from today till the year 10 billion. And so that's our target. And, I think by the end of the year, we're going to get it, and so do most people. On the bottom, we kind of see where the mess might be. This is today. This is more local stuff. Here's the local long puts, the other side of these. Here's what he sold. Here's what's sold at 69. Let's zoom it in a little bit. Here's what's sold at 69.40. This shade of blue means pretty strong as we come down buying, and there's a little formula for how many contracts they have to buy per 2.5 points per 5 minutes or whatever it is. How many contracts of E-minis. I don't worry about the formula. Some people do, but it's a lot. And over here, it's a real lot, technical term. And over here, it's a heck of a lot. Thousands of E-minis every 2.5 minutes, if we head down here. And then this has a decay function, and et cetera, et cetera. That's how you get those moves. Okay, so on the other side here, we're kind of neutral when we're in between these. And then this becomes a magnet down towards 6,900 if stuff hits the fan. Oh, I was above. I'm sorry. So my bad. So if we get above 68.90, here's the long contracts. And then if we get above that, then we kind of stall out up here. And on the below side, so there's more selling pressure if we break above. So here's where he is, 68.95. But up above is where the big boys and girls are. That's where the 100Y gang is. And they're going to come in today. Here they are. Let me show them to you. Here they are, 19,000 contracts up here. No, wait a minute, my numbers are wrong. Oh, my map doesn't go far enough. That's why I don't see them. Sorry. I keep having to extend the map because we keep going higher. 6,900 seems so far away once upon a time. Okay, here we are. 12,000 up here at 40. That's what we were looking at. We were looking at this zone here. And they will be back again today selling 2 or 3 delta, 100 wide up here, and selling something down here. Here they are down here somewhere, and they'll be doing that tomorrow. And so those form like extreme edges. Yesterday, we got right up toward it on that big gap up. So on big gaps, these come into play. On the big gaps a few weeks ago, their puts came into play. Typically, they're just features, that are off in the distance that don't really matter. It's good to have a little mental asterisk to know that they're there just in case. All right, so that's that. So what I also want to say is that per Goldman Sachs and other gurus that we've been reading about, market participants are still net short. The buyback window, the corporate buyback window, is opening. While there's no official legal window. There's not to get SEC scrutiny, all that kind of stuff. There's pretty much a, a standard that's not necessarily a legal standard, but it's a standard that there's a blackout period where they don't do buybacks before their earnings, and about 48 hours after earnings, they start buying back into the end of the quarter. There's record buybacks, and there's going to be record buybacks coming up. So that's a consistent bid that's going to be coming into the market. That's a consistent bid that's going to be coming into the market through the Santa Claus rally. We're not talking about necessarily today. I've shifted the view to longer term. That's a consistent bid that's taking us up to 7,000 and beyond. And 7,000 is where the JP Morgan collar short strike is in December. And we tend to reach it and exceed it. And I suspect we will again. Other factors are net record shorts or exposures actually kind of thin. You know, you wouldn't expect it up here, but it's the old most hated rally, and people are going to have to jump on board. Additionally, mutual fund and hedge fund tax selling season, loss selling season kind of ends in October 15th, whatever it is. It seems to be an unofficial official season. So that tax loss selling is over. So losers that were sold, some might be bought back. So those are all the underpinnings going on to support the market. That doesn't mean we're not vulnerable to a headline. That doesn't mean we can't have a week or two like we had last week between now and 7,000. I'm not saying that, but I'm saying, broadly speaking, the landscape is heading up, heading bullish, and that's what I think. And if you think there's value in what I think, listen to it and pay heed. If not, then don't. Okay, let's take a look. I'm getting questions about, okay, that's all great. What do I do today? How do I make money today? Well, let's see. How do we make money today? What do we say about movement today? Let's get down and dirty. So the IC whale, you see 25,000-ish contracts. I can't always tell by open interest what's there, but we'll save that discussion for another day. So I want to get away from. I want to have this blocking me on the bottom if I can. So the safest, I mean, safe would be a million miles away, but let's just try. I mean, 25 would be nice. I would do that. I would put one in right here, right now, and then modify and play with it. If I were selling a 5 wide, what would a 5 wide look like here? Not really enough juice. So I might want to have to. I might want to have to join him over here. Not a great 5 wide day. 10 wide might be. I mean, nothing great on the 5 wide trip. Now, if if you're content to take 20, 25 cents on each side, and you want to go like 30 and try and get a quarter on this side and a quarter on the other side. And we won't talk about, we can look at a third the width of the spread later. And on top, we have that big structure over here at 95. And I see the deltas have shifted. These were 20 deltas or 22 deltas when he sold them. Now they're 20, now they're 29. And you have a lot of interest here at 6,900, of course. So on top, yeah, we have a little more luxury. So on a 5 wide at 35 cents, I know that's attractive to some people. for the way I play it. Oh, there's my 55. There's my partner for the bottom one on top. That looks decent. Or what I call my wish trade. That's 35 cents. If I could get 50 cents for that, I'll take it. Wow, this is kind of juicy at the bottom. The juice is starting to come back into the bottom. If I can get 50 cents for that, I'll take it. And I would then manage these actively throughout the day. Um, and these trades that I put in, if we just look at yesterday, for example, these were trades I put in the morning. Where were they? Yeah. Okay, so I sold this call spread for 55 cents in the morning. And here's where's the buyback? Here you can see it right here. Here's a put spread I sold for 40, bought back at 20. Here's an iron condor I sold for $1.40, and there should be a buyback here at 70, 50%. So what I do with these is I mechanically put in 50% buy to close and often don't even look at it again. Or I also put in butterflies and I put in some flies some that closed profitable, some that didn't. Uh, let's take a look at some flies. It's not a great fly day. Let's see. So movement's going to be constrained. So I mean, where would I make my fly? A lot of it's time of day dependent. So let's think of two different flies. Let's start off with a put fly. Good morning. Let's start off with a put fly, and that looks okay to me for 45 cents. That's cheap for, I'll even give 55 cents. That's cheap for a 10 wide. And we have a path in that direction. And on top, let's just flip the script to a call. We could definitely get sucked up toward this zone. And now this time of day, at the end of the day, depending where we are, see, the calls are expensive. All right, so I'm not paying $1.45 for that. I'll put in 45 cents and then come back and look at it later. Oh wait, but hold on, let me cancel that. That's or is it not? Okay, no, never mind. It's good. Let me see something. Yeah, eh, not crazy about that. I'll put in for 45 cents, like I said. Not investment advice. You're just kind of watching me mess around. And I'm going to do another. What I sometimes do is layer in a little 5 wide into a bigger one, usually at the same center, and it just kind of makes it a more interesting trade, especially if you get decay at the right spot. This is something that I do. It's one of my Frankenstein flies, called Frankenstein because it ends up being pieces cobbled together. Now, on the earnings front, I'm not sure what's going on. They've been coming in fast and furious. I don't know if anybody let's just see. Let's just go here. Here's what I have for today. Just a few that I played. SoFi is up 5%. Very nice. Wolf, little piece of doo-doo, which I have. PayPal's up 16%. See, the geniuses are wrong. Huh. I read some institutional research, like, I don't remember who it was, Goldman or JP Morgan or Bank of America. The best plays for earnings, high conviction, all that BS. And buying a PayPal put was like the highest conviction one. Why? Because the put prices were cheap. Maybe they were cheap for a reason. But the geniuses had it. Open AI headlines. Oh gee. What do you know? AI headlines and we pop. Rambus is getting killed. Now, Rambus was a big name back in the 90s. Rambus was like the latest, greatest thing. Rambus, was it Sherwin-Williams, the paint company, right? Yeah. Sherwin-Williams, okay. So the way I look at that, and SoFi, I think the housing market, I wrote a piece about this. I think the housing market's getting ready to start to move a little bit. Housing adjacent, like Sherwin-Williams, housing adjacent, like mortgage refinance, like SoFi or Rocket. Um, I had a list that I put out, housing adjacent, like Trex, housing adjacent, like Boise Cascade, housing adjacent, like GXO. I think those have a good chance, not today swing trade necessarily, but now I'm starting to, okay, now Corning is down 7%, but this thing is up like 1,000,000% this year. So, I don't, these things are priced to perfection and beyond. Oh, this thing, Galaxy, wow, this is getting beat up. That was a hot one. Amcor, I'm surprised that was a hot one. The gold miners, yeah, I think it's early to get back into gold. Confluent takeover speculation. I have a small speculative position in this, both shares and options, risk reversals, short puts, long calls into April. UPS, the real economy, UEC, uranium, Carrier Global, air conditioners. I have a trading position in that. Why? Air conditioning hits two sweet spots. Hits the housing market rebuild, industrialization, let's call it three sweet spots, and AI build. AI needs cooling. Are they the poster child for AI cooling? Probably not. Are they big enough that they're going to have their 2 cents in there? Sure. So anyway, so now you're getting OG investor slash swing trader, position trader, not necessarily OG I see, man. This one, Pony, yeah.
Doc, I have a
I'm
housing.
sorry. I forgot all about you. I'm sorry.
I wanted
Feel
to share.
Free to interrupt me earlier with the process next time.
All right. I'm watching. Wait 1 second, guys.
And this is our E-mini guy. This is our futures guy. Chewy, go ahead.
I kind of like Open Door, ticker Open. It's a housing stock. I actually used to work for them. I kind of like longs for, call it like a 3-point move on Open if you guys are looking for a swing. I think that's prime to pop.
Oh, and speaking of which, the Case-Shiller index housing thing came in better than expected, and the market seems to like that. Go ahead.
No, that was it. All right, you want me to get into ES now?
Yeah, go ahead. Well, if you want to, or you can do that, whichever one you want to do. What's his X handle? You talking about Chewy's or mine? Do you want to put your X handle in there?
Sure, I'll put it in the YouTube chat. Give me a second, guys.
And can you put it in the X chat when you get around to it?
You mean
Tag
the
it,
Zoom chat?
tag it onto me or something. And my X handle, I imagine you're watching it here, so there we are. There we are.
Okay, so getting into ES, Doc, if you wouldn't mind pulling up an ES chart.
Yep, that's what we have up here.
Okay.
Wow, look
So
at
I'm looking for. I was looking for a pullback at open.
that.
Not anymore.
Past tense.
Yeah. Nothing crazy, but just a little entry into this bull trend. I'm pretty bullish into today, just like you are. If we do get a pullback into 69.10, I'm gonna really like that for a discount into the bull entry. Basically above 69.05, I'm not looking for shorts. Just kind of looking for discount entries into the upside. If we break below 69.05, I'll target 68.90. So, I mean, a small move to the downside, but I think we have a lot of support below us to kind of stop a big drop from happening today.
And so that would be right around. So here's 6,900 where we have a gamma inflection point. And what do you say, 68.90? And we have a gamma line right down there. So, and what I want to point out is there's confluence between the technical analysis and the gamma, and those are higher conviction trades. And that's one of the things that we bring to the table here.
Mm-hmm. Yeah, and if you're not in the futures chat, you can be in both Doc's options conversation and mine at the same time, if that's something that you're interested in, just to have a double-edged sword there.
Right, like on days like, well, yesterday paint was drying, so both of them were kind of like whatever, although we got a little movement at the end of the day.
Mm-hmm.
But typically, there's periods of the day where the options are kind of slow and where you might have some better scalping or vice versa. Now we're putting the finishing touches. We kind of talked about it last night. We just have to kind of like make it officially official. Launching a 3-month special discount. So the premium service, which is usually $99 a month or $9.99, whatever it is, a year, which includes everything, which includes unusual whales and stock and option trades and SPX and ES and all that kind of stuff, would be at a discount. It's monthly pay, 3-month commitment, so to speak. So it comes out to like $239. And we might tweak the price a little bit, but basically what you get, and the reason why I think the 3 months is important, especially if you're new to the gamma landscape or new to looking at it in this kind of way, is I think it takes 3 months to kind of learn it. And if you make that commitment to yourself, you're going to put the time in. You're going to put the time and you're going to actually learn it. I'd rather teach you to fish and then go off and, become, get your own fishing boat than have you kind of get discouraged because you can't bait the hook. And then after a month you say, screw this, So that's what we're going to be launching. And along with that, there's a boot camp. Tell them about the boot camp.
Yeah. So I'll do a 2-week live one-on-one introduction into my strategy. I get into everything that I know and how I do it exactly to the T, and kind of give you the resources that you need to be successful, whether it's prop trading or just trading your own futures account. We've had really good success right out the bat, and 2 of our members have already paid for the program within less than 2 weeks. So we're pretty excited about it. And I've been
Okay,
doing this
so
for a long time. I'm new to the options Gelt Discord over the last, I don't know, 3-4 months, but been teaching this for quite some time.
yeah, and Chewy is a good example of the kind of person I'm talking about. And we have a fair number of futures people who kind of stumble into, or seen this gamma stuff on Twitter or wherever. They go, there might be a pony there somewhere, and then they investigate and they see there's something there, but they're not sure exactly how to use it, how to implement it, etc., etc. And so they stumble into one gamma server or another, or one service or another. And that's actually where I first met him, in I think in Valsings. I don't remember where I met him. He kind of jumped into the deep water fast, if I remember correctly. And so this is the 3-month thing. I think is also good for your futures people. And a few futures people have asked me to do a webinar specifically geared in that direction. And I don't know if I can get that ready for this Wednesday. We do a subscriber-only webinar every Wednesday from 7:30 to 9 Eastern time. I probably can't get it because we're having a big Halloween party on my property this weekend, and I'm signing to close on the house next door Wednesday after the market closes. And so there's a lot kind of going on, so it's probably not going to be able to prepare something. And yeah, so here we are, 6,900. The IC whale may get skewered again. He may get skewered again. So obviously, and if it's not obvious, I'm going to make it obvious by showing you. I'm going in here, and where's those calls I wanted to sell? I definitely don't want to sell those same calls right now. So erase that. This one might be of interest, but you don't want to see how it plays out. So let's see how this plays out, because I mean, switching back to E-mini to SPX for a second, then I'm going to hop. Switching back to SPX for a second. I don't know what I just did there, but that doesn't look great. Crap, what did I do? I made this a lower indicator. There we go. Okay. So we're right up against the 68.95. Now we could stall there. We can go right through it. Why? Because I'm going to guess, let's see. One of the cool features here is I can go to flow and make flow from today. And let's just make the flow from 8:30 to now. And what happened from 8:30 to now? And let's flip it to customer side so it's more obvious. We have customers buying 68.90 calls. Looks like 68.90 and 6,900 call spreads. And I'm surprised that we don't see more buyers up here at 6,900. But I suspect we will. And then we'll see how this shakes out at the open, and we get that information through options depth. And then, like I said, we have somebody that his name is Hoot Owl something or other. He goes by different names in different places, who does a great job taking the intraday update data and somehow aggregating it in nice, easy to. He's a kid, he uses spreadsheets and all that like the rest of you people. For me, this would be like, you gotta be kidding me. I just kind of watch the numbers and see where we go. But anyway, any final questions? And we'll get that maybe tomorrow or soon. We'll have it launched, and I'll kind of talk through it and kind of make the product offering more ubiquitous and easier to see, etc. And until then, trade safe, and 7,000s, here we come. Not today, but here we come. Okay, take care, everybody.
Good luck.
Another day, another new all-time high. Why not?